Well, welcome back, everyone. Geopolitical risks remain high in this market. We still remain in the long-term uptrend channel going back to October of 2022. Let's zoom into the hard right edge and see what today brought in markets and what it likely means for the balance of the week. We had a great bounce on Monday, something that we were expecting after a lower low. Communicated that out on Friday to folks on WealthCharts and in the private active trader room. We're expecting more of an indecisive behavior after that bounce underneath the VPOX. We got that as well, and we were looking for a breakdown to start yesterday or today. It did come in today's trade. We have moved back down, and of course come down to close in and around the area of the Sunday night open, which was a gap down open. We did traverse another 80, 90, 100 points lower than that to the lows that we saw on Sunday night, and then reversed up primarily on jawboning from politicians and Trump alike. That jawboning doesn't seem to be keeping the market up in place. Oil remains pointed up. The euro remains pointed down. Risks remain high. Volatility is starting to get percolative again. And what we're seeing effectively is a market that is eroding and has taken another step back down towards the lows that we saw on Sunday. Now, are we going to continue on our way down? Well, let's go take a look at a technical template that can help with that. The S&P E-minis on a daily chart using the SSS indicator had this incredible pre-trade conditioning going back to January the 26th to the signal that we were left with on February the 3rd. Pre-trade conditioning involves at least three closed signals, at a minimum of three closed signals, and then a movement around the MSR channel, which are the three lines here, the moving support and resistance channel. We got four signals. They're not to be separated by more than 3 to 6 bars. And we were left with a down signal, and price action came down below the bottom of the MSR channel. Now, that constituted a signal that looks out a week to two, sometimes even up to a month, that we are likely going to see lower lows in markets. We did get a rebound with lots of events and the market waiting for NVIDIA's earnings on the 25th of February, and that was the only day the double red dots in the SSS tool turned to blue and cooled off for a moment, but back to it we got, which we were expecting, and down the market has come, closing below the MSR channel for 2 days in a row, and then more now, almost 5 days in a row. We know when Rob says 2 days in a row below the channel, we've probably got a momentum change. Well, we certainly do, and we're seeing the channel point down, the indicator in the subchart point down, and of course, prices are driving that. Now, let's redock that daily chart and see what the other time frames, smaller time frames that cast their signal out a little less out into the future, tell us about the market move. The 4-hour chart that looks out 3 to 5 days is telling us we're in a sell as of the 2 p.m. 4-hour bar on the 10th of March with downside risks remaining in place, and so does the 1-hour chart. Now, the 4-hour chart looks out 3 to 5 days. The 1-hour chart looks out 3 to 6 hours. So we've had these wonderful downside signals for the majority of the day today, and there were some incredible moments as recent as into the end of the day where we had this pre-trade conditioning giving folks clarity for short side trades from a day trading standpoint. Let me share that with you right now. Let's undock that 5-minute chart and take a look at the incredible indecision the market was facing in a range between 67.15 down to about 66.95, about a 20-point range, which in this market is considered small based on how big the moves have been. But we were left with a down signal, price action closing below the bottom of the MSR channel for 2 bars in a row, the MSR channel clearly sloping down, and also very importantly, the blue line, the slope of the slow momentum line, has to be part of that mix as well, and we finally started to see it slope down. We did see a great short signal right over there at the 2:15 p.m. Eastern Time bar. It did deliver effectively from the open of that bar at 67.05 down to 66.85. We got a counter trend bounce that pushed up into the MSR channel, calling off the short for a couple of bars. We got the double red dots moving to single blue dots. We in fact went into a tentative buy signal state, but it got overturned rapidly, and another triple S short came to bear from about 6,700 all the way back down to the 6,670 area. So some incredible moves to take advantage of using powerful tools, and I taught exactly on these tools yesterday, shared amazing results with folks, and folks wrote in telling us how much they loved the session. So I'm going to be doing another one of these very special classes starting at 10 a.m. on Saturday, March the 14th. It'll happen at 10 a.m. March the 14th, 7 a.m. Pacific, 9 a.m. Central. It's a do not miss class. I'm going to be bringing in some fresh examples like ones I just showed you right now and more. And of course, giving you some key strategies and tactics that I'm using to trade these markets successfully day in and day out. Go get your seat now, becomeabettertrader.com/yes. You can put that in your URL or click the link in the email, and we'll see you at the session. Have an incredible rest of your day, and thank you for watching.